Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do mostly the top-down analysis of different financial securities, and today we're going to be looking at the Forex currency pair Euro USD. So let's get to it. So the Euro USD, I like to do my analysis from the higher time frame down to the much lower time frame, and I use pure price action trading strategy in doing this. So I'm currently on the monthly time frame, and what I mainly try to achieve on this time frame is to get my key zones, which I mainly refer to as rejection points for those that have been following my channel. And from those horizontal bars on my chart, you can see I already have those mapped out. The second thing we try to get from the monthly time frame is our directional bias, which is where we feel the market is heading to. So if we look at this chart, if I zoom out of it, you can see that the currency pair for the longest time has been making series of lower lows and lower highs. However, if we look at the most recent part of the chart, we can see that for the last 1, 2, 3, 4, 5, 6, 7 or 8 months thereabouts, the euro has been pushing up against the dollar. So, and this push has made it to go above a major key zone. So we believe that the Euro USD, despite what has been happening since the beginning of this trading week, is still our directional bias is still upwards. So we believe it's going to move from this, still moving from this support zone, and our next target will be this resistance zone. So without wasting much time on this time frame, let's go to our weekly time frame. So if I'm even to impute like a trend line here, you can see the trend line was broken, and if I zoom in, it was just not just broken, it was retested, a initial resistance zone taken out, and we can see that the buyers have been in control of this market. So our next major target will be this resistance zone. So having said that, the next thing I get to do will be to go to the weekly time frame where we try to get like a market structure, a chart pattern of the market, of what price is doing. So I try to do this by first maybe going to the line graph. And from what we can see that the market is mainly ranging. So we really can't get a clear chart pattern. So I'll go back to the candlestick chart and just map out this mini range. So if we look at again at the structure of the market, excuse me, if we look again at the structure of this market, we can see the market has been making higher highs and higher lows. So this was like um, a high, a higher low, a higher high. So the market made a higher low and went into a range. So the best thing to do on this time frame now would be to map out the range that has been created. So of course we know that a ranging market is the market moving in a horizontal instead of a vertical direction between a support and a resistance. And the simple rule for trading the ranging market is that we buy from the support zone and we sell from the resistance zone. So each candlestick on the weekly time frame represents 1 week. So if we were to count the number of candlesticks that we have here, you can see that for a whole lot of weeks, um, the Euro USD has been ranging. But the most important part of this market is for us to look at this this support area, because this is where price is currently being rejected rejected from. So this still supports our initial take that the Euro USD is heading upwards because price is leaving the support zone and we believe it's heading back to the resistance zone. Will it break out of the resistance zone? Only time would tell. So the next thing to do would be to go to the daily time frame where which I always refer to as the tradable time frame. Now, if we We said the market has been ranging for a while. So if we look closely at it, we can see that the market has been moving between this support and this resistance zone. And the market just came back to the support zone. That's why we can see the market made lower highs and lower lows to get back to the support zone. However, if I zoom in and I go back to the line chart, we can also see that the market on the support zone had made a double bottom and is currently heading upwards. So even though we were unable to see a chart pattern in the weekly time frame, we can see something on the daily time frame to work with. And of course, the simple rule for trading double bottom is that we map out the neckline, we wait for price to drop back to this neckline and take our buy opportunities. Also, price can even come way back down. So long as it doesn't take out this bottom, then the setup is still in play. Another beautiful thing about us seeing the double bottom here is that we're seeing it on a support zone. The double bottom is being formed on a support zone, and we can see price has already pushed downwards. Then another thing could be that if I go back to the candlestick chart and I still zoom in, I can as well impute a counter trend line, because even though we have a ranging market, we have like a trend within the general range of the market. So the market has been making a series of lower lows and lower highs to come back from the resistance zone of the range to the support zone. Now on the support zone, it has given us a double bottom, which is a strong bullish reversal chart pattern. We can see that the market has just broken above the counter trend line within the range. So everything now is suggesting that the market is ready to push upwards back to this resistance zone. So the question, like I always ask, will now be, how do we take advantage of this particular setup? So we go down to the H4 time frame. Now on the H4 time frame, this is actually like a valid setup right now. Now, what do I mean by it being a valid setup? You can see that price on the H4 time frame as okay. If I make an adjustment of my trend line, it's still yet to close fully above. Price is just breaking our H4 counter trend line. So the simple thing to do would be to wait for price to clearly take out this level. We'll wait for the retracement to see how far this retracement will go. Then we can now take our buy trades. Now the retracement might not come way down to this level. So all I'm trying to say is that we're at a very, very key point where we can get possible trading opportunities. So if you're into the trading of this, can even go down to the H1 time frame to still see for ourselves what's happening. And of course, you can now see that the market is already making higher highs and higher lows as against the general lower lows and lower highs that it made to get to this support zone. So the simple thing to do now would be to watch even on this H1 time frame. Once this trend line is clearly broken, we wait for the retracement back and that either back onto this neckline, and then we'll take our buying opportunities. So this is my simple take for the Euro USD. I know a lot of people are pumping in buys, especially those that trade in the much lower time frame, but it is pertinent for us to know that it has just hit a major resistance on the weekly time frame, and it is ready to move upwards, maybe with for the remaining trading days of this week. So if you come across this analysis, you can always, like I advise, to compare it with yours. And if you have any take on it, whether contrary or in support, you can always drop that in the comment section. Like I stated earlier, this is a trading academy. If you think there's any way we can help you to with your trading journey thus far, you can always reach out to us via the details on my YouTube bio. Don't forget to like, share, and subscribe to this channel as well for others to be able to see subsequent videos. Turn on your notifications so that you'll be amongst the first to see new videos on this simple style of analyzing the market. Thanks again for supporting this channel and enjoy the rest of your day.